Q4 2025. Transaction value reached 141 billion, representing 20.4% year-on-year growth. Transaction volume totaled 53,475 transactions, down 3.4% quarter-on-quarter. Year-on-year growth remains positive. However, momentum has clearly moderated when viewed over a longer horizon. This is the AirDXB Q4 2025 Dubai Real Estate and Shortlet Market Report. Starting with overall transaction activity. According to Property Monitor, total transaction value increased to 141 billion in Q4 2025, maintaining positive year-on-year growth. At the same time, transaction volumes dropped 3.4% quarter-on-quarter, closing the quarter at 53,475 transactions. Transaction values remain elevated, indicating continued capital development across the market. This reflects a transition away from rapid post-boom expansion towards a more measured growth phase. Turning to pricing dynamics. Average residential price per square foot reached 1,927 dirham in Q4 2025, up from 1,912 in Q3 and 1,724 in Q4 2024. This represents 11.8% year-on-year growth. Despite this increase, transaction composition shows a clear shift towards lower value units. 51.1% of transactions were priced below 1.5 million dirham, and studios and one-bedroom units accounted for 62% of total sales. The data indicates that transaction values are increasingly being driven by unit mix rather than price inflation. Buyer demand remains concentrated in smaller, more affordable formats, reinforcing affordability through size rather than price. Activity within the secondary or resale market. Resale transaction volumes declined year-on-year in Q4 2025, while off-plan transactions volumes increased by over 22%. No surprise there. In value terms, off-plan transactions recorded growth of approximately 29%, compared to just 5.4% growth in resale transaction value. These figures reinforce the dominance of off-plan activity in driving current market momentum. Completed secondary stock continues to transact, but it is no longer setting the pace of the market. For owners of completed properties, outcomes are increasingly influenced by asset management and strategy rather than overall market direction. The long-term rental market shows further signs of weakening. Year-on-year, Q4 2024 versus Q4 2025. Total long-term rental contracts declined 5.72% year-on-year. Renewal contracts recorded a sharper decline of 6.61% quarter-on-quarter. Q3 2025 versus Q4 2025. Renewals fell a further 8.3% quarter-on-quarter, while new rental contracts showed only a moderate increase. These trends point to a reduced tenant commitment to long-term leases. Flexibility and shorter-term arrangements are increasingly shaping rental behaviour across the market. Looking at the broader picture for 2025, total transaction value for the year reached 541.5 billion dirham, representing 26.9% year-on-year growth. Total transaction volume rose to 200,778 transactions, up 18.8% year-on-year. Rental contract growth remained limited, highlighting continued pressure within the long-term leasing segment. Overall, 2025 reflects a strong market. However, there is a growing gap between sales activity and rental performance. These trends and their implications across sales, rentals, and short-term accommodation are available in detail in the AirDXB Q4 2025 Dubai Real Estate and Short-Let Market Report. The full report provides a comprehensive breakdown of market performance, segment trends, and strategic consideration. Download the report to understand how these shifts relate to your property and the wider Dubai real estate market. See you next quarter.